Hey, everybody, welcome back to another State of the Mark ending October 2024. We got a lot of good stuff happening here in the next few weeks, next month, November, with the election, interest rates, housing. If you're a seller or a buyer, this video is for you. If you're a seller, a homeowner, and you're just curious, this video is for you. We do these every month to keep you abreast of what's going on with the market because we want you to be the smartest person at the closing table, right? So sit back and relax. We're going to go through some different sectors here with you and talk about the interest rates. Let me just go ahead and share my screen and we'll get going. All right. All right. So the first sector that we like to talk about is the median sales price. So as time goes on, history has a tendency to reveal more information, right? So what I did is I adjusted my screen here to maximum as opposed to just showing you maybe what's been going on in the last year or 3 years or 5 years. But this is a really good idea of what's been going on with pricing. And the median sales price at the end of October was 739,000. Okay. Well, what was it in I mean, October was 750, and it was 739 in September. So the median sales price went up about $11,000. All right. So here's, I think, some interesting information that I'd like to share with you. If you're interested in buying a home and you're still thinking that maybe the interest rates are a little higher than you'd like to see them, they will be coming down shortly. I don't know when, but I would say in the next 3 months or so, 30, 60, 90 days. With the price of housing keep going up, right? Because that's all we see here, right? It's just up, 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 right? My suggestion, and from what I hear from the pros, is buy a house that you can afford very comfortably, whether it's 600 or 700 or a million, whatever that number is, and back it down a little bit so that it's really affordable for you to make those payments and then live in it for a year or two, fix it up, enjoy the equity ride, right? Because you're going to get equity over the next couple of years, even if it's 4 or 5% a year, and then sell that property in a couple of years. You won't have to pay any taxes on it because uh, you get 250,000 of free money basically to go ahead and buy that house and fix it and not have to pay taxes on it. So my suggestion would be is buy something that you can really afford, put down as much as you can to maybe waive the PMI and jump in and take advantage of this equity. I'm seeing many, many folks over the years that say they've been waiting and waiting and waiting for the prices to come down. And unfortunately, I don't see that happening, especially with the low inventory. You can see in the last year, just if we went October, right, October of 24 to October 23, right, um, just in 1 year, it went from 740 to 750. So it costs an extra $10,000 to maybe wait a year. If you've been thinking about the last couple of years and waiting, and we go back to 22, that number is 662, which is almost $100,000 of lost equity. That's what I'm talking about, the lost equity. Take advantage of these prices that are keep going up. All right, so the next sector is going to be your active listings, homes for sale, right? So this tells us how many properties are for sale. So at the end of October, we were at 937, and in September, it was let's see here. Well, okay, September was 1,018, right? Right there, 1,018. So inventory has dropped slightly. And that's just because I think more buyers came out when the Feds dropped the half of base points there. It was 0.50. They dropped the base bias base point there. Okay. I think more buyers maybe came out and they bought some houses and they went under contract. We definitely saw an uptick in our buyers as well. And so hence, that's probably why the inventory dropped a little bit. But if you can look and go back, you can see how it's been steadily dropping way before COVID. I mean, if you went back even just for before COVID, which was right here, um, March of 19, right? We're sitting at 2,200 homes. Today we're sitting at half of that, right? So half of our inventory is gone. Let's talk about the next sector, which is your days on market. So today we're sitting at a median of 19 for the end of October, which is fantastic. Houses are going under contract quickly. Some are lingering if they're not priced right. I've been finding that the ones that are overpriced are lingering, and then others are selling over the weekend. And some, on average, take a couple of weeks or so, 2, 3 weeks to sell. All right, so 19 days there for your median days on average. If we look right here, right around COVID, again, right before COVID. I always go back to COVID because that's when we were in a more normal market. So March of 2019, we're at 76 days, right? Today we're at 17 days. So that's fantastic. So if you're thinking about selling a house, now is as good a time to list it as any while inventory is low. And these interest rates, I think right after the election, you'll find will start coming down a little bit, half or quarter point at a time. And that just increases your buying power, right? So let's talk about your months of supply is right here. So we've talked about this before in the past. Anytime you've got 4 months or less of inventory, you're sitting as a seller's market. We're sitting at 3.1 months at the end of October. It was 3.5 months in September. We dropped that because the inventory dropped. It's our called correlation, right? 3.1. So you're in a seller's market. Anytime you have 4 months of inventory or less, that's a seller's market. Then you've got a neutral market, which is between 5 and 6 months of inventory. And anytime there's 6 months or more of inventory, you're in a buyer's market. When's the last time we were in a buyer's market? Let's look and see when the last time it was above um, 6.0 months of inventory. Let's take a look and see when's the last time we had a six. Right here around, let's see here. Looks like November of 2016 was the last time that it was an actual buyer's market where there was a lot more inventory to pick from. Okay. And today we're sitting at 3.5 months of inventory. All right. That's your months of supply. The next thing we want to talk about is your list to sales price ratio. So this is today at the end of October. We're at 98.5. So if you list your house for 1 million, you should get 980,500 for it. That number from September was 98.8, so it's 98.5. So it's loosened up a little bit by 0.3 of a point. But take a look at these two here. What do you think those are? Those are the two unicorn years of COVID, right? 21 and 22. So super high spikes where lots of people were paying, a lot of money over asking price, 102% over asking, 103% over asking. If you go back before COVID, which was, let's see, right around here, let's see, March of 19, the average list to sale price ratio was about what it is now, just a smidge less at 97.1. Today we're at 98.5. All right. The next thing we want to talk about is your interest rates. Let me go ahead and just stop my share screen. There we go. All right. So interest rates have been a big talk the last 30, 45 days or so. The Feds dropped the half basis points by 0.50, and everybody thought the interest rates were going to go down quite a bit. But in fact, they did the opposite. They actually went up a little bit. Not sure how that works, but that's what happened. So now that we're getting tomorrow or the next day or so for the election, things we'll see how our new president's going to be. That's going to be exciting. And we'll see what happens what the Feds do after that. Maybe perhaps in late November or December, we'll see some type of an interest rate adjustment. But for today, interest rate 30-year fixed. I've seen them between 6.5 and 6.99 for really good credit. 30-year fixed, 6.5%, and a 30-year FHA, Federal Housing Administration, and Veterans Administration, 6.75. And if you're thinking about doing a 30-year jumbo, 6.8%, and you do have to finance $766,550 or more. So there you have it. Thank you so much for watching the latest State of the Market for October 2024. I'll talk to you next month at our next State of the Market. Thank you so much. If you have any questions, give us a call at 508-566-0051. Shoot me an email at sjzano@gmail.com.